Well, hello everybody, and welcome to the final show of the 2015 calendar year. It's the weekly review, where we take a look at what happened, what we expect to happen, and how we may or may not be able to position for that. As far as what happened last week, another nice, bounce back, 3%, 2.5%, 3% across the board. NASDAQ leading on the upside, over 6% higher. You got the Russell on the flip side. There's a spread of almost 10% or plus 10% between these two. That's just how much of a divergent year we've had. I'm not going to spend a lot of time because almost everything this week was just like last week. And that is that we had the markets, move around. And so we had, push up, push down, push back up. We've been having this rotation back and forth now for quite some period of time. And if you look at it on the weekly, you can see it very distinctly, right? We had that big drop into August, the big rally off of that. Now we're getting this oscillation up and down each week almost. And if you ask me, off the bat here, what do I expect in terms of this coming week? I expect that these markets are going to try to move higher, and they're going to try to move right back into the top of that breakdown bar. So I would be back in this area by the end of the week. Quite a feat if it does it, coming off this low from 1992, roughly 2000, coming all the way back up, 110 points on the S&P 500. It's going to be quite a run if it gets there, but it's already got a big move in place, and it can certainly do it by the end of the year. So that's kind of the expectations, up and down, oscillations week to week as we rotate back between the commodities on, the commodities off. And actually this week it's kind of interesting because it looks like the commodity trade is going to continue for another week. The world markets holding steady, really nothing there, the same as last week. Technically, if we look at the positives and negatives, the euro, the yen, they're holding that higher range. It looks to me like they're going to set up another move if, in fact, this week plays out the way the charts look. And so what I mean by that is if these charts do set up the way they're kind of looking, we may see the top end of this range tested. And if it's going to test up there, if the euro is going to test up into this area up here and stretch this out a little bit more, then we're going to see that commodity trade continue. And if I bring this over to the weekly, you can see it's going to try to come back up and test the top of this breakdown bar. Not the breakdown, but the retest regen bar. That price point is roughly 108. We're trading at about 107, so another buck to the upside, and we'll see if it can get over it. The other top is 106.93. I expect it's probably going to break that one this week. It's been testing into it for a while now, and so this one probably fails this week to hold price. And then we get back up into this higher one and test into it, which is about the 108 number. If true, then the commodity trades are going to stay on the table. The Japanese yen, if you look at it, it's already pushing up into that higher range. Japanese yen has gotten over the swing point low now and held it. And so that's twice now it's done it. That makes me think that the yen, if we look at it on a weekly basis, is going to get back up into this resistance zone that we see. And it itself is already, the top of this one is 80.44, and it's closed at 80.54. So we're over the retest regen on the weekly, which again tells me that these commodity trades are probably going to have a better shot at actually continuing to trade to the upside versus getting pushed back down each time. And so if I had anything to say about the beginning of the year, looks to me like the commodity trade might be a decent trade to start the year. We'll see how that plays out as the year gets underway. But right now, at least currency-wise, looks like the dollar's stuck in a rut. These others are pushing higher, and they're probably going to push a little bit more higher before it's over. So if I had anything to say about the new year, it's that the dollar's not going to go anywhere, and it looks like that trade's going to continue. And that oscillation back and forth, that range is going to give it up on the euro, on the dollar. We're going to see the dollar drift into the bottom end of that range in the second, the lower range. And we're going to see the euro try to push up to the top half of its range. Junk bonds, it looks like they're going to hold for a while, especially with the dollar weakening. And the high beta stocks, they continue to get sold. I don't know if that'll continue, but so far, that was the big picture last week. Fundamentally, there's really no news. It's all the same. On the money flows, we had that rotation back into commodity space, XLB, XLE, XLI, and away from the consumer and the technology. Minor sectors, it was all gold, it was all commodities. On the backside of it, social media, the internet, all of those got hit. And so you just see that huge flip week to week, although this week I think it's going to stay the same, and that's what I'm talking about here. So last week it did exactly what we thought. This week I expect it's actually going to continue what we saw last week. Economics earnings, really nothing until the new year. What's the bottom line? I expect we're going to get another week of sideways to higher, and we may push right back into the breakdown bar on that S&P 500. I want to spend a little bit of time saying what is it that we expect for the next year. And the reason for this is, you always got to have a, kind of a big picture of where you think things are going. And I'm moving more and more to this idea that what we really have happening out here is we have a big picture deflation that's going to look very similar to what we saw potentially back in the 68 to 80 period, where the markets were stuck in a rut. It was stagnation. If you lived through that period, then you know what I'm talking about. And that is that there, what we really had is we had inflation creating stagnation, right? Now I'm wondering if it's going to be exactly the opposite. Deflation creating stagnation. And the reason I say that is if you look at anything that's happening or what is happening out here, that's the way it looks, right? It looks like we're moving into a stagnation period. If you remember, or if you look back at the charts, prior to 68, you had a 100% plus move from about 1960 up to 68 in the markets. That was during the Vietnam War. That was during the Great Society campaign, all the money stimulus that was coming into the system. Well, now we have all the money stimulus that's coming into the system as a result of the Federal Reserve from 2007-8 period, or actually 2008 and 9 and then forward, right? So now the question is are we going to get a deflationary period as a result of the huge debt structure that's out there that acts almost exactly the same as that inflationary period that we saw back then? And if we look at a chart and you just kind of go through this chart, and I've laid out the numbers for you if you want to analyze it yourself, but if you go back, there was a 37% drop off of 68 up into 70, followed by like an ABCD structure, right, that eventually took us from that price point, took us all the way back up, and that price escalation, right, took us up a huge percentage, about 72% from that whole period, which was followed by another big decline, which was almost a 50% drop in price, followed by another ABCD structure to the upside. And that ABCD structure took us up another 43%, followed by another 20% drop, and you get the picture. It was a huge stagnation in terms of price, covered a lot of area, right? But it did not bring us to a point where we broke out. We considered, or we continued to trade in a range, and that range, the biggest part of that range was here. That large range, you went over it, you went under it, but you couldn't really sustain those moves. Finally, in the 80s, we broke out again, but it was 12 years of this sideways type move. I'm wondering if we're entering the same sort of consolidation type period now, where we're going to see these large range moves between the highs and the lows that have been carved out. And so if I'm looking here, on a monthly time frame, and I look at this, I'm wondering if what we're going to see is we're going to see some sort of a period where the price points, right, continue to move back and forth between some large range. I expect the large range top we've already got. The bottom may be here, but I suspect it's going to be a lot deeper when it's finally done. It could come all the way back to here before it's all over, in my opinion. Now, that's speculation, right? We won't know that until we actually get a break some of these swing point lows. We're just simply not going to be able to prognosticate that kind of action, until we see this market really start to break something down, which it hasn't been able to do so far. And so on a long-term basis, a swing point low has to break. A couple of them have to break to really change the trend. That would put us back into this price point if it did, and then eventually lead to something much lower potentially as a result. But first, let's just pay attention to the shorter term picture, because if we do that, that will bring us to where we need to be as we get there. I don't know that anybody can prognosticate what's going to happen with any degree of accuracy over a long period of time. And so what you really have to do is focus on the shorter term time periods and use those to tell you what's going to happen in the longer term. And so if we come back to the daily chart and if we look at what's here and what risk there is, right, we actually have just one swing point low on this side. You've got some swing point highs up here that could lead to a nice escalation if it breaks to the upside. But again, as I said, I don't know that can hold. I suspect it will break higher and then come right back down. So maybe the nominal new highs are going to set up. If we bring this back and bring it on a weekly now, there we actually have some more dangerous type points that can set up. In particular, we have those two ranges that will tell us what's going on a short-term basis. That top range is really the top from here up, right? And then up underneath it is to the bottom. And so, I think our focus has to be these ranges to start the year and looking at these ranges to tell us where things are going to go. So that's kind of a big picture where things could go. Too early to know where they're going to go, but I am slowly moving to the idea that we've got some sort of a stagnation starting to set up, and that stagnation is probably going to be a large range. And folks, we're not at the bottom of the range, we're at the top of the range if in fact that range is developing. And so we'll see how it plays out this coming year. As far as the portfolio last week made no major changes, actually made no changes at all, either adding or subtracting. A lot of these, I've got some detailed notes for you here. A lot of these are moving closer to their scale out price point. If we get there, we're going to take some profits. If we don't, we'll probably come into the year invested about the same that we are, and just see if we get a little bit more push to start the year out. Okay. Well, that's it for this year. Happy holidays. Have a safe rest of your holiday period. Enjoy the family and friends while you can. Before long, it will be New Year's resolutions and starting all over on another year, 2016. As always, if I can give you any help, let me know. I get requests, from various members to look at a particular chart or to look at this or that they're trying to do. I'm more than willing to, take a little time and see what you're doing in particular and try to help you if you would like. As always, thanks, and let's have a great new year together. Until then, take care, and I'll see you next time. Thanks.